Did you know you can use your IRA, 401k, or 403b retirement program to fund the startup of a business, purchase a business, and include working capital in that purchase? Well, you can, and you can do it tax-free. I'm Brent Freeman with the CBB Group, and in today's video we're going to talk about the Rollover for Business Startup, or what's more commonly known as the ROBS program. We're going to cover the program's pros and cons, eligibility requirement, steps to set the program up, and discuss a few of the providers that you may want to consider using if you're going to go down this path. So if you're a buyer looking to use your retirement accounts to fund the business startup, stick around. You might find this video interesting. The Rollover for Business Startup program was an outcome of the Employee Retirement Income Security Act of 1974. Basic requirements are that you use a retirement account such as an IRA, 401k, or 403b program to fund the acquisition or business startup. This is for business owners investing in an existing business, the startup of a new business, or buying an existing business, and that includes using it for a down payment or working capital. So let's review the pros and cons of the program. And let's start on the pro side. The first one's fairly obvious, and that is you can leverage your retirement funding accounts tax-free. 2, you can start a business with no debt. 3, you can invest in yourself and not the stock market. 4, there's no credit score requirements under this program. And 5, you can use your retirement funds as a down payment to purchase a business. The cons. You are risking some, if not all, of your retirement funds on a business startup or a purchase of a business, and you've got to be realistic with regards to if you have the ability to do that. IRS audits may be a little burdensome, and we can talk a little bit more about this later in the video. You must operate the new business as a C corporation. Now, there's more work to maintaining a C corporation than an LLC or an S corp, and you do have a double taxation where corporate taxes are 21%. Dividends are taxed at your personal income tax rate. So instead of a S corp or an LLC, which directs pass-throughs, there will be some level of double taxation on that corporation. You must administer the retirement plan using a third-party administrator, and to do that there's usually a one-time fee of between $3,000 and $5,000, a monthly maintenance fee between $50 and $150, and you must have a third party that's willing to give you some compliance support for filing Form 5500. Let's discuss the eligibility requirements of the program. The first is that you use your tax-deferred retirement account to fund the program, i.e. 401k, IRA, or a 403b program. The second is that you must be an active employee and take a W-2 wage in the corporation, and that wage must be market rate. So if you're the president, you must take a market rate salary for president, and you must actually work in the corporation. The funds must be used for business purposes only. So if you had the idea of forming a company and then maybe purchasing a boat, airplane, condo, can't do it. It's very strictly audited, and you've got to pay attention to those audit rules. And then lastly, you must offer your employees in the company an opportunity to invest in the C Corp's retirement plan as well, usually a 401k. So again, 4 eligibility requirements: tax deferred account, must take a W-2 salary and be employed, funds must be used for business purposes only, and you must offer your employees an opportunity to participate in a 401k plan. There are 5 basic steps to set up a ROBS structure. The first is to set up a new C Corp. Now remember, you can only use a C Corp entity for this program. Once that's done, then the C Corporation will establish a retirement plan, usually a 401k. Then the existing retirement funds, i.e. your 401k or IRA, are then rolled over into the C Corporation's 401k or the new retirement plan. The retirement plan then uses the funds to purchase the stock called a qualified employer securities from the C Corp. The C Corp now has the cash to start the business, buy a business, including using those funds for a down payment. So think of this structure as the C Corporation that you just formed now has the funds to go out and purchase another business or start a business, including the acquisition of real estate. So again, 5 basic steps to set up a ROBS structure: create the C Corporation, establish a retirement plan, roll over your existing retirement plan, either all or some of it, into the new 401k plan that the C Corporation has established. And then using the retirement plan, they can go out and purchase stock in your C company. That then allows that cash to flow from the retirement plan into the C Corp, and they can use it to purchase a new business, start one up, or invest in working capital. Our goal in this video was to keep the ROBS program at a fairly high level. Now you can only imagine the complexity and paperwork that it would need to be filed in order to form a new C Corporation, put together a qualified retirement plan, roll over your old 401k or retirement plan to the new C Corporation, then move the funds from that retirement plan into and purchase stock in the C Corporation so that the company has the ability to either start a new business, buy a business, or inject working capital into a new business venture. So we really recommend that you contract a ROBS provider. Now there's 4 or 5 of them out there. We've usually used one provider in the last 4 or 5 years, and that's Benetrends. So Bill and I've had a fairly good success with that, and our customer feedback has been that they do a fairly good job and are decently priced. There are some other ones out there that you may want to consider using. They include Guidant Financial, Pango Financial, Business Funding Trust, Fan Fund, and my favorite, at least for a name, is My Solo 401k. So we'll provide these in the closing credits so that you can write them down or contact them directly. So the ROBS program, it's a solid alternative for a buyer looking to use their retirement funds to fund a new business, purchase a business, or inject working capital in a business. We've covered the pros and cons, the structure, a few of the steps required to set up the ROBS program, and a few of the providers that you may want to contact to get this started. So I hope you found this video interesting and that you've got something out of it. and we'll see you on the next video.